Hey everyone! Today, I'm diving into one of the coolest tools in the trading toolkit, the Parabolic SAR. If you're looking to add some serious firepower to your trading strategies, this is something you can't afford to miss. So what exactly is the Parabolic SAR? It stands for Stop and Reverse, and trust me, it's as dynamic as it sounds. Developed by the legendary Welles Wilder, this indicator is designed to help traders spot potential reversals in the market price direction of traded goods like stocks or currencies. First off, the basics. The Parabolic SAR appears on charts as a series of dots. When these dots flip position relative to the price, it's a signal, a hint that the price direction might be about to change. If the dots are below the candles, it's typically a buy signal. Above the candles, and it might be time to sell. Simple, right? But here's where it gets spicy. This indicator isn't just about spotting entry and exit points. It's about maximizing efficiency. By adjusting the settings, which include the step and maximum step, traders can fine-tune how sensitive the indicator is to price movements. This means more tailored strategies and potentially more gains. Who doesn't like the sound of that? Now, implementing the Parabolic SAR in your trading can seem daunting at first. But remember, like any tool, practice makes perfect. Start with a demo account, tweak the settings, and watch how the indicator responds to different market conditions. Over time, you'll get a feel for how it fits best with your trading style. Alright, that's a wrap on the Parabolic SAR. Keep experimenting, keep learning, and most importantly, keep trading. Catch you in the next one where we'll tackle more trading secrets to boost your market game.